Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
Hey Lauren, I know we're going to talk about the markets, and the markets are going down, and
Yes.
it's all in the media right now about how the big market correction is going on.
Right. So the first thing is we don't really know where the markets are going, but at the exact moment that we film this, I'm pretty sure the U.S. market on the year is still just barely up, whereas the foreign markets are down. That might have already changed though in the last 2 minutes.
Yeah, very close.
But so far that's how things are. The last month has been
Right.
pretty bad. Then the important thing that I wanted to talk about today is something that seems really simple when I say it, but then applying it is not always so simple. When I say it is that you should buy when things are
Right.
at lower prices, and you should sell when things are at higher prices.
Talk about call it rebalancing.
Yeah.
Right.
And buying at lower prices and selling at higher prices seems very, very nice, and everybody loves to hear it. But what that means is you buy when markets are turbulent and you sell when they're peaceful. You buy when the economy is doing poorly,
Right.
and you sell when the economy is doing well.
Right.
You buy when it feels bad to buy, and
Right.
you sell when it feels bad to sell.
We're not saying
So-
sell everything
No.
or buy everything.
No, but if you
Yeah.
wanna follow that rule in any way, shape, or form, you know, to buy at lower prices and to sell at higher prices in any form, you have to do it when it feels bad to do it. When everything around you is telling you to do just the opposite. So I have no idea where the markets will end up by the end of the year. I have no idea if
Right.
I know last year was a spectacularly good year, and what we said at the end of last year was, you know, after a great year, what do? You rebalance.
Right.
Whatever your stock and bond allocation is, you bring it back to its original allocation. And we're going to say exactly the same thing at the end of this year, whether it's up, down, sideways, or nowhere, or whatever. It doesn't make any difference. We're going to say the same exact thing. You rebalance, and that's the key to rebalancing. Is not just that it's a strategy to somehow buy at lower prices and sell at higher prices. Lots of people can sell you some sort of ridiculous strategy that they claim will do that.
Right.
The key to rebalancing is that it is purely mechanical. You do the same thing every time,
Right.
and it has to work if you do the same thing every single time. That's the key to it. It eliminates all of the emotion and all of the feeling and all of the attempt to make a prediction out of the
Right.
process. All of that is just gone.
Right.
So, the markets have been doing poorly. I wish they would do better. I would always prefer the markets to go up rather than go down. But you know, one of the reasons I wanted to talk about this, I just got a call from a client who was talking about their 401k plan.
Mm-hmm.
And inside their 401k plan, they had the Vanguard Total International Stock Fund.
Okay.
And the client wanted to know, you know, the fund lost X $1,000 last quarter. Is that what's supposed to happen? And I said, well, yeah, international stocks did poorly, you know, last quarter. That's what the fund, and the client said to me, you know, you just about said the fund did what it should do. Well, actually, what's weird is the fund did do what it should do. It tracked the international stock
Right.
market. Now, the international stock market might not be doing what we want it to do, but in reality, it's that the international economy is not quite doing what we would
Right.
want it to do
Right.
at the moment. So that's still the same key to investing that it is always the same key to investing. Invest in the markets, get your share of the total market returns, and when things go up, rebalance and sell a little bit of them. When things go down, rebalance and buy a little bit of them.
Right, and the thing is you know, I have very vivid memories about the market crash in 2008, 2009.
Right, yeah.
And this is nothing like that.
No.
And by the way, I did, you know, people tend to follow like the S&P 500 and the Dow Jones. It's kind of like the market, even though there are many other market indexes.
Right, yeah.
And it's interesting, like today, I believe at the end of this taping, the Dow finished around 16,100. Well, in the last 12 months, there was a time where the Dow touched 15,300. So this
Right.
is not even the lowest it's been in the last year. So
Yep.
takeaway from that is that there's no reason to panic. And what Lauren's talking about makes great sense. Let's rebalance. Let's buy when things are cheaper, they're on sale, and that's what we're doing. So if you don't are not working with us currently, and you don't know quite what to do, please contact Lauren or myself, and we'll be glad to give you some advice on how to take the next step forward. Thank you for watching Erickson TV. We'll see you next time. Bye now.
See you next time.